Here's a comprehensive beginner's guide to crypto trading tips along with an overview of cryptocurrency analysis. Part 1. Crypto trading tips for newbies. Education and research. 1. Start by learning the basics of blockchain technology and how cryptocurrencies work. 2. Understand key concepts such as wallets, public and private keys, and decentralized exchanges. 3. Research different cryptocurrencies, their use cases, and potential future developments. Start small. 1. Begin with a small amount of capital that you can afford to lose. 2. Cryptocurrency markets are highly volatile, so it's important to manage risk effectively. Choose a reliable exchange. 1. Select a reputable cryptocurrency exchange with a good track record. 2. Consider factors such as security measures, user interface, customer support, and available trading pairs. Secure your investments. 1. Use hardware wallets or secure software wallets to store your cryptocurrencies. 2. Implement strong security measures such as two-factor authentication, 2FA, and unique, strong passwords. 3. Be cautious of phishing attempts and always verify the authenticity of websites and links. Develop a trading strategy. 1. Define your trading goals and timeframe, short-term or long-term. 2. Consider your risk tolerance and preferred trading style, e.g., day trading, swing trading, or hodling. 3. Set clear entry and exit points for your trades. Diversify your portfolio. 1. Spread your investments across different cryptocurrencies to minimize risk. 2. Consider a mix of established cryptocurrencies, e.g., Bitcoin and Ethereum, and promising altcoins. 3. Research and evaluate each investment based on its potential growth and market trends. Stay informed. 1. Keep up with the latest news and developments in the cryptocurrency market. 2. Follow reputable sources, join online communities, and participate in discussions. 3. Be aware of regulatory changes, partnerships, and technological advancements that may impact the market. Manage emotions. 1. Cryptocurrency markets can be highly volatile, leading to emotional decisions. 2. Avoid making impulsive trades based on fear or greed. 3. Stick to your trading strategy and use logic and analysis to drive your decisions. Part 2. Cryptocurrency analysis. Technical analysis. 1. Study historical price and volume data to identify patterns and trends. 2. Learn to read candlestick charts, identify support and resistance levels, and use indicators such as moving averages, MACD, and RSI. 3. Understand chart patterns, such as triangles, head and shoulders, and double tops, bottoms. Fundamental analysis. 1. Evaluate the underlying factors that can impact a cryptocurrency's value. 2. Research the project's technology, team, partnerships, adoption rate, competition, and regulatory environment. 3. Assess the potential long-term growth and viability of the cryptocurrency. Sentiment analysis. 1. Consider the overall market sentiment and investor emotions. 2. Monitor social media platforms, forums, and news sources for discussions and opinions about specific cryptocurrencies. 3. Use sentiment analysis tools and platforms to gauge market sentiment. Risk management. 1. Set a maximum percentage of your portfolio to risk per trade or investment. 2. Use stop-loss orders to limit potential losses and protect your capital. 3. Consider implementing risk-reward ratios to ensure favorable risk management. Remember, crypto trading involves risks, and no strategy can guarantee profits. Continuously educate yourself, adapt to market changes, and be prepared to learn from both successes and failures. It's also recommended to consult with a financial advisor or professional before making any investment decision.